Hello, dividend executives. Welcome back. You already know we are jumping into the account. We are trading options. We're reviewing our plays. We had quite the week. If you can see just from this year-to-date chart, we had a steady climb as we sold cash secured puts, and then we had a smackdown as Tesla got pulled down. And you know what? We're back up. So I love to see that. At the very height, we were sitting around 3,600, and we're right back there at the 3,592. I had to make some plays. I had to use what I call the odd lot strategy. And I want to show you exactly what I did so that I can walk you through what I have to do sometimes when a call goes in the money. In this example, it went pretty deep in the money. So what happened this week? Well, Tesla had quite a week. This is the account I'm trading TSLL, which is a 1.5x bull ETF on Tesla. And it moved. So if Tesla moved, it moved even harder. And you can see the account bounced back 12.67% this week, or $404, which is why you saw such a big swing in the account. For the month, we are basically flat even. So we're back to where we started since we got assigned. For the past 3 months, we're up 8.38% or 277. And year to date, we started the account back in February. So we are up $611 or 20% for the year. So we love to see that. It is good, but as you know with Tesla, this sucker can swing. So what did we do? Well, you might notice that we sold some of our shares on TSLL, and I'll explain why we did that, and I'll walk you through exactly what we did. So I had a call on TSLL for 15.5 expiring tomorrow. I didn't want it to get called early, so I had to make the moves today, and I had to make it towards the end of the trading day. So we are recording after the bell. So you can see here, I have been averaging down on Tesla. I've been buying and selling calls to average down my actual cost. And let's go all the way back to the start, right? So we were, let's see if we can see where we assigned. Call right here. On August 4th, so basically a month ago, we were assigned 16.5 strike, 200 shares, and it cost us $3,330. Let's see. So we made $100 on our first call. That lowered our costs right off the rip. And then what we did is we started averaging down. So you can see here we bought at 16, or we just bought an odd lot. I'm sorry. So we bought 15 shares there at 16.51. We continued buying at 15.38, and we bought another at 15.05. Another short call roll, so that's now $130 a premium so far. So what did we do? We took some of the premium, we bought more shares. More shares at $13.37. We went all the way down to $13.37, so we were down big time on the account, and you saw that in the history. So we're down. We kept buying more. Because I believe in Tesla long-term. $15.27. We kept lowering our costs. Meanwhile, we kept rolling calls. As the stock started to rebound, we started rolling. We rolled from the 14.5. I sacrificed the premium. I rolled out a week, and I got up to the 15.5. And that's where we got today, right? We're at the 15.5. Tesla's sitting at $16, and we are in the money. And so I have two options, right? I let it go at the 15.5. I take the quote-unquote loss on the shares, but I collected premium in the meantime. Or what I do is I engage the odd lot strategy, which means I raise some cash by selling shares. In this case, I sold 12 shares at $16.48. Now, keep in mind, my cost on TSLL is, let me scroll up so I could show you, is $16.30, right? So we sold those shares for a profit, and really the whole reason we did it though is to raise cash so that we had enough capital to roll our position or close out our old position, right? So we still have 18 shares of odd lot. Those can run free and clear. If TSLL continues to run, then we will have those free and clear. But the 218, I wanted to make sure that I got those rolled up to my strike price. Now, I sold 197 or so, and to roll this position, what I did is I bought to close my positions at the 15.5, and that cost me 1.05 per contract, or $210. And then I sold to open a new contract for $60 at the 16.5. Now, what this does is it guarantees me that no matter what, if I do nothing and Tesla is above 16.5 next week, I will make money because my shares are at $16.30. So I will make 20 cents per share times 200 shares, right? So I'll make $40 plus all the premium that we've made thus far, right? And I also have some odd lots that I can sell off as well, and we would collect the difference on that. Now, what we want to actually happen is we want Tesla to be under the 16.5 or right around the 16.5 on 9/8, and then I'll be able to roll that call out or sell a new call for even more premium. But what I wanted to do is I wanted to get out of the money, and a lot of the times if a stock really runs, especially when you're using a 1.5x ETF, you want to get out of the money as fast as you can, and this is the way I did it, right? Now, I could have rolled it out and up even further. I could have got to the 17. I could have got to the 18. But for this, I sold $170 worth of stock at a profit, and I paid $90 to roll this up and out. So that paid for the cost of the close, and there was still some cash in the account, which you saw was $100. But I guaranteed that no matter what, if these shares get exercised early or if I get called, no matter what, I am booking that 20 cents per share times 200 shares, so the $40 there. And you can see that sitting in my account, right? So you can see for the day we're up 14, for the week we're up 400, for the month we're even, and year to date we bounced back. We seriously went from 3,600 all the way down to 2,900, and then back to 3,600. So quite the journey over the last couple of weeks. We went down $700 during this swoop. I mean, you can just see it. We drained all the way down to the bottom where Tesla got really low at that 2,800. But you know what? We stick to the strategy, and that's why we invest in companies we don't mind owning long term. I just kept buying more shares, and I kept picking up shares in the 15s and the 14s, and it worked out. Sometimes it doesn't work out, but this time it's worked out so far. Now, if the stock trades flat, that's wonderful. If the stock goes down a little bit, that's wonderful. If the stock goes up, it's also wonderful because I'll just lose the shares, I'll get my cash back, and then we're back to selling cash secured puts. No problem. If we want to look at what Tesla's paying on a cash secured put, well, we know that my cost basis was $16.30, right? So I don't want to get more than that. So I would just go back in and sell a cash secured put. We'd obviously want to look for the 8th. And you can see here, if I wanted to re-enter, if I did end up losing my shares next Friday, then I could just go in and it'll probably be roughly around this, depending on what the price of it is. And I can get paid, this times two, another $60 to re-enter, right? So we were paid to enter. We got paid to sell some calls, and we had to roll some and use some odd lots, but we're still up big time. And you can see that in the account for the year to date. So wanted to update everybody on that. This is a strategy that I use a lot of the times. I'm going to have to use it tomorrow. I've got about 400 shares of Tesla that are in the money right now. I'm probably going to sell 200 shares at a nice profit, and I'll probably roll some other shares, and I'll share that on my Twitter. But yeah, I just wanted to showcase this. Sometimes you gotta have the odd lot strategy, and this is what you have it for, to get yourself out of the money. And we will update you next week when I make some more trades, probably around the Thursday or Friday or the following Monday. So thanks, everybody. I hope this content is valuable to you. If you do, please just give it a like, subscribe, write down a comment, anything. It really helps the small YouTubers, and really helps me, keeps me motivated to showcase some of my plays as we navigate the crazy waters of Tesla. Thanks, everybody. Happy investing. We'll catch you next time.